Life is a roller coaster ride full of ups and downs. Well, we all know that we have to save for retirement, children's education, family obligations, medical emergencies, travel. All the responsibilities and desires that life brings with it. But the truth is, no matter how much you save, it's never enough. Have you ever tried beating a treadmill while running on it? It invariably stays in front of you. Inflation is like a treadmill. If the rate of inflation on an average over the long term is greater than the return on your investment, then you will have lost the race before it even started. And as time passes by, the gap between your investment growth and cost increase due to inflation will only widen. If you still don't believe in the power of inflation, take a look at these numbers. Let's assume an average 5% rate of inflation over different time periods. For example, if you take a look at your monthly expenses currently, say they're about Rs 20,000. After 25 years, it will be above 67,000 rupees. If you want to send your child for higher education today, it would cost you about 5 lakh rupees. But after 15 years, it will be above 10 lakh rupees. If you want to marry your child today, it will cost you about 10 lakh. But after 20 years, it will be above 26 lakh rupees. So, if you want your investment returns to win the race against inflation, you need to choose an investment option that has the potential to perform with some momentum over a long period of time. How do you beat inflation? All you need is an investment vehicle which has the potential to deliver returns which are substantially higher than inflation over a long period of time. Did you know? Indian equity markets have given an average return of 17.73% since inception. An equity mutual fund scheme with a long-term track record and consistent performance, such as DSP BlackRock Top 100 Equity Fund or DSP BlackRock Equity Fund, could potentially be that vehicle which helps you comfortably stay ahead of inflation over time. Experience may have taught you that tasks done in a planned, disciplined, and systematic manner always deliver the best results in the long term. Well, wealth creation requires pretty much the same principles. It's all about systematic investment planning and maintaining that disciplined approach till you achieve your desired result. Use the power of compounding to your advantage. If you save a small sum of money regularly in an equity mutual fund, your money will work with greater power and it will significantly impact your wealth accumulation. That's the underlying principle of the power of compounding. But you need to start now. Even a seemingly small delay of 5 years can cost you the crorepati tag. Let me illustrate how. If you make a monthly investment of Rs 5,000 for a period of 15 years, you will have invested the sum of 9 lakh rupees. At an annualized return of 18% per annum, this 9 lakh will have grown to 45.96 lakh. Let's look at another scenario. If you invested the same 5,000 rupees every month over a period of 20 years, you will have invested a sum of rupees 12 lakh. At an annualized return of 18% per annum, this 12 lakh would have grown to, guess what? Rupees 1.17 crore. Therefore, that extra 5 years of investment has more than doubled your final corpus. Starting a SIP in an equity mutual fund allows you to take advantage of investing in equities and also seek diversification. In addition, it minimizes the effects of investing in volatile markets. You don't even have to worry about when and where to invest or even track daily market movements, as there is a professional fund manager taking care of your investments. Systematic investing significantly reduces the risks attached to market timing. Step 1. Select a mutual fund scheme of your choice from the basket of equity schemes available with DSP BlackRock Mutual Fund. Step 2. Select the monthly investment amount. Step 3. Decide the investment period. That is to say, for how long do you wish to invest on a regular basis? We recommend that for an investor to benefit from the power of compounding, you need to select a longer time period. For example, if you are starting a SIP to build a retirement corpus, you should select a period which is equal to the number of years that are left before you retire. Step 4. Decide on the frequency. That is to say, do you wish to opt for a monthly or quarterly SIP option? We recommend a monthly option. As if the power of compounding wasn't enough, investing with the help of SIPs also offers you the additional benefit of rupee cost averaging. Simply put, you buy more units at lower prices and less units at higher prices without having to track the market every day. So how does rupee cost averaging work? This is how. The amount you invest gets converted into units depending on the net asset value of the scheme you have invested in. NAV is the market value per unit of a fund. If the NAV in the first month is rupees 20 and you have invested rupees 2000, you will get 100 units. Similarly, in the next month, if the NAV is rupees 25, you will get 80 units. The following month, if the NAV is rupees 18, then you will get 111 units. So, after 3 months, you would have 291 units. This means that investing through SIP helped you pay a lower price per unit. On an average, you would have paid only around rupees 20.61 per unit. The units get accumulated over a period of time. You can stay invested to the time you wish and redeem your units when you exit from the scheme. The units are redeemed at the applicable NAV and you get back your money with returns. You can also opt for a systematic transfer plan. Make a lump sum investment into one of our income funds along with instructions to transfer a fixed sum on a specific date into an equity scheme of your choice. All it requires is a one-time instruction on your part, which will be followed till such a time that the lump sum investment within your income scheme has been depleted, or you have instructed us to switch your investments into another equity scheme from within our basket of schemes. You can download our SIP calculator on your mobile phone. Just SMS SIP to 922 317 9333. You can also follow us on Facebook to get regular updates on DSP BlackRock mutual funds. Thank you for spending this time with us. We hope that you've enjoyed our presentation that's helped you understand systematic investment planning a bit better. Have a great day and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents and information carefully before investing.